Welcome. It's the Butcher of Wall Street, BossBlunts. Here to be a little obnoxious and answer some questions for you. Gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody stuff together. Okay, 3, 2, 1, let's go.
This recording will be live streamed on YouTube.
I want my fucking money.
So if you don't want to be recorded, this is not the stream or the space call for you.
Griffin, I want my fucking money.
What's going on, Manuel? Polka, Ascending Vegan, Equinox, Allison, Melly. Thank you, everybody, for joining, both on Twitter and on YouTube and Discord. So it's good to see so many people turn out from the community. I'll be more than happy to take questions if you want to put your hand up. I can take any questions you have. I'll just start by prefacing this conversation here with a little bit of background. I'm a stock market investor. I'm an entrepreneur, a business owner. I own a logistics company, a trucking company, and a small real estate company that I'm working on, and then currently working on Xchange, which is a soon-to-be broker-dealer to be competing with the likes of Robinhood and Webull. The difference is that we will not be using dark pools to route orders to Citadel and Virtue. All of our orders will end up in the Xchange one way or another, preferably through lit markets directly, as often as possible. And we will not accept payment for order flow from outside dark pool abusers. And I think you understand exactly who I'm saying without giving any further details than that, because it's a long laundry list. So that being said, I've been in AMC and GameStop here since just after the January run-up when I found out about it. I found out as deep fucking value was going on to Congress and seeing all the crazy price action on GameStop and AMC and the 1,000 percentage point movements. Kind of starting to figure out what the hell is going on with that pump and dump. That shit is reminding me exactly like dry ships, because I was in dry ships many years ago, and that was one of the most epic squeezes I've ever seen in my life. So after I heard from a few more friends that this is a serious issue with AMC and GameStop, and I started to do some more due diligence, and that's when I really started to get heavily into the stocks, and realize that I like these stocks a lot, and they've got fundamentals that keep getting better and better, and it became something that I was greatly interested in. And little by little over time, I started to realize, in my opinion, from the thesis that I've been forming, is that the situation with AMC and GameStop is unlike any other. It's not like any previous short squeeze we've ever seen. It's not like dry ships or Volkswagen or Tesla even. I believe it to be a completely different situation in the fact that this is the first time in history. One second. This is the first time in history that there's been so many billions and billions of synthetics on multiple companies like AMC and GameStop. And what it's led to is a situation of can kicking down the road from 2008 through today, in which most people believe that the Dodd-Frank Act regulations and that other regulations that we have were the cause, or should I say, like the cure for the issues in the market, the over leveraging in real estate and the stock markets and equities and collateralized debt obligations, mortgage-backed securities. But in reality, none of that really changed. Okay, they pretty much, when I say they, I mean banks, prime brokers, shadow holding companies. They pretty much moved all their tranches of BS into exchange-traded products overseas, where Dodd-Frank regulations don't mean anything. And so I started to realize that the derivatives that we had back in 2008 was in the 33 to 35 trillion dollar mark. And because of the over leveraging and the ridiculous amount of printing of money that's happened over the last few decades and the tens of trillions of dollars that the federal government, I take that back, that the Federal Reserve has issued out to, basically central banks and countries worldwide, it's reached to a point where the total derivatives notional values of just banks and holding companies not including countries and all the other corporations, but just banks and holding companies equals around $430 trillion worth of total notional derivative value. Now, that's not all losses, but the vast majority of it would be considered rehypothecations of various assets in which the same underlying assets are represented many times over. So what this leads to is the same exact situation that we had back in 2008 with the mortgage-backed securities and the Michael Burry situation of, the collapse of the American and worldwide real estate markets. However, at the time we had a fairly strong economy and we weren't at a point of hyperinflation where we are today. There was room for easing and lots of it. What's happened over the last several decades is that's pretty much all disappeared. And what we have been left with is a situation where the amounts of leveraging that's occurring by prime brokers, short hedge funds, insurance companies, your very own bank, is so extreme that there's no other way to go except for down from here. That the reason for this is because of hyperinflation right now. We cannot print our way out of this problem. Printing more money will just cause further hyperinflation. We've got supply chain issues around the world in which currently Shanghai, a city of 26 million people in China, is completely shut down. And Chinese ports are pretty much, Chinese steamship lines and the ports outside of China are parking lots. And it's getting even worse than LA and California ever were. Being that I deal with logistics, I see what's going on in Los Angeles and Long Beach every day, as well as the other ports and rail yards here in the States and around the world. I'm constantly keeping an eye on them if we're not working on a shipment in that area, and getting updates from various carriers, trucking companies, freight forwarders, manufacturers, you name it. Aside from that, you've also got these unemployment issues, the rampant inflation that's keeping people from going back to work because at some points it's easier for them to maintain their current state of living by staying home and receiving, government bailouts or unemployment or whatever else they can get for the time being. As in the meantime, our real estate market is extremely overvalued. For the first time in history, the average American home price is over $500,000, and the average Canadian home price is over $750,000. Institutions and corporations are literally pricing Americans out of the market. And I started coming to the realization that what's happening isn't going to be a short squeeze where AMC and GameStop run and everything keeps on going, and the markets keep on moving, and financial markets just look to the next play and for these banks to lose their money. Or to try to abuse to make money. So the situation here ends in the fact that the stock market is so overvalued, the real estate market is so overvalued, equities, bonds, you name it, tech stocks with terrible earnings, mortgage-backed securities, everything, U.S. Treasuries even, are extremely overvalued, and we've got pretty much an everything bubble happening. In which this bubble of everything will burst, if not all at the same time, in succession, kind of like the dominoes, like a game of Jenga. Again, the difference being is that we don't have the same economic strengths, or anywhere even close to them, as well as global strengths, like as you're all seeing in Africa, Europe, Asia, and here in the Americas, that we did at the time in order to ease further or bail people out. That being said, I do think that this will lead to a sort of a financial collapse in which many banks and prime brokers and short hedge funds will become insolvent, and they will likely get bailed out by the Fed in order to pay us. Meanwhile, further hyperinflation drives the other 99.5% of Americans that are not invested in AMC and GameStop and other meme stocks and such that run inverse to the market. It will probably run them straight into the ground. So that being said, back in July of 2021, I realized that I needed to start making, Reddit posts and Twitter, and at least sharing the information that I figured out and the things I've seen from the Congressional Budget Office and the Bureau of Economic Analysis, the SEC and the DTC and all these other cats, and just to give people an idea of what's happening from my eyes in the current markets. And I think a lot of people have realized that companies like Evergrande and sanctions and a lot of collateral is going to lead us to where we need to go. And for those of you that may be unaware, there have been several executive orders that took effect both January and June of 2021 that put us in a situation, that I should stop using that word, that kind of pushed us along and helped press this to the point where the margin call defaults were starting to lead to the actual delta hedging for the first time in a long time. That being said, I think there's a lot of questions from people on both YouTube and on Twitter, which I'm on both right now for those of you that are just joining in. And I'd like to take a couple of those questions if anybody, wants to raise their hand. If any of the co-hosts, let's see if we have any requests to speak in here. I'm not seeing them at the moment. If one of my co-hosts is seeing it.
Yeah, I do. I see some.
Could you please? That's one of the issues with Twitter Space Calls is that it is awfully glitchy. So why don't you bring somebody on up here if you can see it? Because right now it's showing me 0. You know how Twitter can be sometimes. Appreciate you, Randall.
No worries. I'm going to bring up Jay Brown because he's the first of mine. So.
Oh, that's awesome. Yes, please do. We need my man Jay Brown up here.
Do you want them to come up individually, or do you want a bunch of people to come up if we see them?
Let's bring a few people up. Let's keep it to a max of 5 people, let's put it 6 people, including us.
Okay.
So bring on 3 at a time if that's cool. Thanks so much. If you guys got a moment. What's up, Jay Brown? How you doing, man? Thanks so much for being here. We appreciate you, brother. You're an awesome member of the community.
Hey, man, I literally hit the button by mistake. That's just, I'm using this opportunity to learn, man. Hey, man, kudos to the teamwork. We got to get this thing done together. So thank you for elaborating and illuminating some of the things that you have been preaching since day one, Kat. Of course, I love you. Randall, nice haircut. Let's keep going, man. And I'm going to sit back and listen and learn for a change and not do a whole lot of talking. I'm just happy to be here.
Well, I appreciate you. And make sure if you guys aren't currently following Jay Brown, make sure you drop him a follow on Twitter because this man is always holding all sorts of space calls. He's a wonderful part of the ape community, whether he likes it or not. We all appreciate him, and make sure you give him your eyes and ears. That way you can stay informed on the markets as well. Thanks so much, brother. Appreciate you coming out. For sure. I did get a question over here. Matt Blair, since while we bring up someone else, Boris, you can go next, but Matt Blair asks, what are the chances that Biden extends the executive order? And I think you really don't have to ask. Well, I shouldn't say it like that. I don't think you have to look very far to see what's going on with China and Russia and the sort of deglobalization that's happening currently in the world. I think that puts Biden in a position in which the administration will not be able to extend these sanctions against China any further because of the backlash that they received last year when it happened. In addition to the fact that China's working pretty much hand in hand with Russia in order to avoid the SWIFT system and to continue the trade of natural gas and oil. They've been receiving oil at cents on the dollar from Russia in exchange for their mutual aid and cooperation in economic trade. So I definitely don't see the Biden administration lightening up on these executive orders. Boris, if you wanted to ask a question, my man, love to hear you.
Yes, I'm going to keep it short. Thank you very much for having me on. And first and foremost, I want to thank the juggernaut amount of information you bring up on us in the ape community, Mr. Marcel. Thank you very much for all that you do. I've been watching you for, the last 5 months. Thanks, Jackson Hunter, for turning me on to your content and stuff like that. My question is, what's the story with the $1.5 trillion given to the banks that was just recently done? I heard a rumor. I'm not exactly sure where I heard it from. Maybe from your channel or from just talk with coworkers and stuff like that. Was there another $1.5 trillion given just to the bank recently?
there's been so many bailouts that I'm not specifically sure exactly which one you're talking about, to be honest with you. But Boris, I did want to say thanks so much for your support, brother. Really appreciate you. I do what I can, and I'll continue to do what I can. And if I don't know the answer, I'll be honest with you. And I don't know if I'm aware of exactly which bailout you're talking about. I do know that in the 2 years after, from 2008 to 2010 alone, in that 2-year period, the United States printed $30 trillion that they gave to central banks around the world and countries worldwide, as well as here to banks in the States. You know, BlackRock, JP Morgan, Bank of America, Goldman, all these cats. Some of them, like Lehman Brothers, were left to collapse, and they were allowed to be bought up for pennies on the dollar from other banks. Meanwhile, they continued to collect the money that was owed to Lehman Brothers in full. I know after 2010, due to a FOIA request from the Blaze TV station of Glenn Beck, there's been an additional 40 trillion on top of the 30 trillion in the first 2 years that we know of in like the preceding 8 to 10 years after 2010. So right there alone, you're looking at almost $100 trillion. You know, so it's an absolutely absurd amount of money. And what's happening every day right now is government stimulus. That's probably what you were talking about during COVID. Let me back it up a little bit here. In September 17th, 2019, the reverse repurchase program market, it's an overnight lending market between the Federal Reserve and banks, pretty much collapsed. In one day, the cost to borrow basically went up to about 11%. At that moment, the Federal Reserve had to step into what is usually an automated overnight system and bail these banks out in order to reduce that cost to borrow because it was killing their liquidity. Something by the name of COVID-19 came along, and when it did, it allowed the government the ability to state that this is an emergency and we have to file, we have emergency declarations here that will allow us to print trillions and trillions of dollars and give them to these banks. And in the meanwhile, Americans were going to receive $1,400 or $1,500 or whatever it was in exchange for the $1.5 trillion that they were handing out to banks. So yeah, that is true in a sense. I just don't know how if that was another one that was more recent, because every single day the banks use this RRP program to put money into it in exchange for U.S. Treasuries from the Fed, and the next day they return it and get that money back. That used to be at a 0.05% rate, and it is now at a 0.3% rate. So meanwhile, the government says they're reducing quantitative easing and starting to taper and selling off some of their balance sheet, but they're still spending more money every single day on the reverse repurchase program, on these bailouts for these banks. You're right.
I'm sorry, I'm just reading, I don't know how credible Vox is, but
Go ahead.
On Thursday, March 12th, the Federal Reserve Bank of New York announced that it will offer $1.5 trillion in short-term loans to banks to address, quote, highly unusual disruptions in Treasury financing market associated, end quote. And that was on March 12th. Do you know anything about that? Is there a new $1.5 trillion short-term
Sounds like it to me. Sounds like
right.
that sounds like it to me. It sounds like another bailout coming our way. It's insanity.
All right, that answers my question. Thank you for having me speak, and it's wonderful to meet you.
Thank you, Boris. I appreciate it. We just literally found out about another $1.5 trillion in bailouts coming to these fucking banks. Why? Because the liquidity is so bad that things are collapsing left and right. Look at the stock market every day. Look at it. Look at crypto. I won't get into it right now. Let's keep going, and we can take it. Masked Investor, AMC Biggums, thank you guys so much for coming out. Randall Cornett, Cash Striker, all of you. Appreciate you guys. What's going on over there?
I know my boy Adam here has been. I'm just looking at him, and he's had his hand up for a while.
Bring him up.
Like, to ask a question.
Bring them up. Make sure, and you guys can jump in anytime, Matt.
I appreciate you guys having me up here. I got a quick statement and then a question. The quick statement is that, guys, I think Lou Ranieri lit our fucking economy on fire in 1967 when he made the mortgage-backed security, and we've never recovered since.
you can literally attach that man to every single financial crisis that America has had since then, and it's kind of fucking crazy. But so my real question, because I just got into this like the whole financial educating myself. What was it? Maybe a year and a half ago. But in 2019, why the hell did the Fed start purchasing bonds? Did they know that they were going to be holding such a gigantic bag?
It's all in the name of the growing balance sheet. Our $9 trillion balance sheet is going to take over 8 years to unwind at the current pace of $98 billion of selling every month. It's a ridiculously slow amount of selling off of this balance sheet, but they don't really have a choice because the Fed is obsessed with the stock market. And in order to keep the stock market going, roaring into higher and higher prices, all-time highs over and over and over again, they had to continue to print.
But do they not understand that you can't just have this fucking parabolic curve going on all the time? You have to have sustainable growth.
Oh, they understand it. The thing I think, in my opinion, I think the Federal Reserve understands it just perfectly. And they say that inflation is a lagging indicator as an excuse to be behind the curve and say that they're standing at the plate. When in reality, they're missing that curveball by a mile on purpose, but they're purposely swinging late. You see, rising inflation causes us to lose our jobs. It causes us to lose our homes. But it causes the United States government to be able to pay their debts off a little bit easier.
So here's another thing, man. Because you bring up inflation. So when they started doing all of these reverse repos and sending out all of these loans at 0.05 or whatever, and putting a shit ton of supply, they basically caused inflation themselves, and then they start buying back all these MBSs and put a bunch of MBSs on their balance sheet, and because of inflation, people are going to start freaking defaulting on their loans, so they're going to be holding the bag.
Yes, they're trying to unwind before that happens, but that's never going to happen. You know, they're trying to come in for a soft landing, but when you've got guys as smart as Zoltan and Marco Metzler and Michael Burry coming out and telling you that the Fed soft landing is complete bullshit, it's never going to happen, it's impossible, I think we need to take that, into consideration. And we need to realize that the Fed's balance sheet asset purchases were out of sheer necessity. It's not that they don't understand, it's that they had no choice. There's no other choice. There's no way out for them but to continue to print further and further. You know what I mean? As much as that sucks. But at the end of the road here, there's a recession every single time. And the Fed knows this. They've just been trying to kick this can to get them to a point where, to get them as far as possible into or past the next midterm election here. So it's an inevitability in my eyes
it's just
that they default on these.
Is what you're saying.
Yeah, and here's the thing: there's about $6 trillion worth of mortgage-backed securities out there. The Federal Reserve owns about $2.7 trillion, and banks own around $3 trillion. So who's going to buy this $2.7 trillion of mortgage-backed securities if the banks are also trying to offload this shit? There's no other players out there that can buy them. And chances are our mortgages, my mortgage, your mortgage, all of ours, they're in 100, maybe 500, maybe 1,000 different tranches of these MBSs, in different loan products, as are the real estate developers in China and all those mortgages. And because of that, that's why it's going to roll around to a global issue. Go ahead, brother.
Altruistic enough to hold that bag for us.
It's not. They don't want to hold that bag for us.
Before they let go of the fucking bag, they'll try and use it as fucking a bunch of junk collateral before anything.
And that's what's going on right now. They're using people's pensions and 401ks to buy this junk collateral for pennies on the dollar. At this very moment, all these mortgage-backed securities are cheap, you know, and Chinese real estate developer collateral, that shit's cheap. It's 15, 20 cents on the dollar, if not less.
Yeah, who was the other Chinese developer that just went under too?
There's a bunch that there's over like 50. There's 100 different Chinese companies that did not make their audits for the Q2 and were suspended from trading in China. And Shimao and Evergrande were amongst those. So every time when I'm looking at my tickers, I see Evergrande is completely halted from trading, and Shimao and a bunch of these other stocks. So yeah, they're not technically bankrupt yet. They are not technically in bankruptcy court. So even though they've defaulted, their collateral is still being accepted.
Default, right? Once they get the big D, they're done for.
Yeah. You see, the new game is they are pulled out of the rating agencies. And they can do this now. So now, like Shimao, just last week, pulled out of the ratings agency. So that means Moody's and Fitch and S&P Global are no longer giving them a rating. Do you see what I mean? This way...
Then who does?
The only person...
Self-regulated
yes,
ratings?
basically, the ISDA players, my man Inspector Biggums and Randall Cornett can jump in at any time here if they want to. But these ISDA players are the ones that say when enough is enough. And if they say, yeah, we're going to let Evergrande and Shimao and Country Garden and all these other 100 collapsing developers continue, we're going to continue to accept their collateral for, you know, dollar per dollar. But until the moment that they're actually pushed through bankruptcy court, they don't want to call that loss on their books. Randall, can you speak on how big these losses could potentially be, brother? I know you know a lot about this.
They could be in the trillions upon trillions, but the thing is like, I think I'm without, because we were kind of confronted on this. I was looking at some of our old videos and some of the comments people were saying is like, hey, we were getting a little bit too complicated with this. For the sake of that,
let's keep it simple.
Break this down very simply. Is you have people, you have party fucking A and you have party B. And we're basically they are working on legitimately a handshake agreement. And being that it's in the derivative markets, it's all OTC, it's all these different things, and they're using all kinds of different instruments. Like, it's really limitless. Like, we could talk about index swaps, we could talk about overnight swaps, we could talk about tons of different things. But really what it comes down to is these guys saying, hey, we're making a fucking handshake on this deal, and nobody's going to look at this, but hey, bro, my collateral's good, as like I'm winking to you. It's almost the way that I picture. That's the most simple way that I can put it. Like, it's good, right, dude? Wink, wink. And they're like, yeah, man, it's fucking great. And that's literally what we're doing.
Yeah. At the same time, trillions of dollars of exposure overall. You know, like Randall just said, in these ISDA markets. And just in like real estate developers in China. We're not even talking about other kind of Chinese companies, you know, like just in that sense alone, because companies like Evergrande have $600 billion in known debt. That doesn't include all their private debt, which we don't know about. Not even one penny. They could have another $600 billion in private debt, and we don't know about it, and never will until they go to bankruptcy court.
Yeah, I mean that's the other thing, man. Is there's people speculating on like 40 trillion and repo bailouts since 2019. And from what I read about the 2008 crisis, is the feds wrote down 11 trillion, but in the audit 10 years later, it was like 28. So if they're saying 40 now, God, what the fuck is...
Again, this is another thing, too. This is the biggest issue when we look into, and I mean, Biggums and I have racked our fucking head. How can we start finding, like, at these contracts, seeing what actual values are? And if my friend, like, there's not a whole lot of insight. They kind of hide under, like, literally like hiding behind like a fucking veil. That's what they're, and like,
why do these companies get to wait 2 years and to disclose all this information? That doesn't make sense.
Actually, to be honest with you, in my honest opinion, at least what I know about ISDA, and again, I'm learning every day. I'm not saying I'm an expert. I think they can wait much longer than fucking 2 years to expose it. Like, until shit kind of goes belly up is when they will have to disclose. I mean, literally, this is like
they even have other, like, dude, on the agreements they use, like, it sounds like you're a smart guy. Go look up like an ISDA agreement from like 2002 versus like, you know, the 1990s ISDA agreement, and look at the differences between there. And these guys will literally play within those boundaries. They could be using some shit from the 90s to do some fucking handshake sort of deal, and it has no bounds. And again, this is a deal between me and you, Adam, right? Like, Adam, you're coming to me and you're saying, hey man, I'm over leveraged. I'm like, I need to, you know, I'm pressing you for money. You're like, hey man, don't worry, I got you. In a couple months, all this shit's gonna crash or whatever. I'm gonna make you fucking whole. And then you're saying, though, at the same token, you're like, hey bud, I got these Chinese fucking government bonds, right? And they're kind of shitty. And like, don't worry about what's going on with Evergrande. Like, it's all good. Like, we're perfect. And I'm the guy that's saying, like, yeah, shaking my head. Okay, dude, I trust this guy. We're ready to fucking go. And that's kind of what's happening. And it's a preservation act to protect all of themselves. And they do it under these ISDA contracts where nobody really has any insight until after the damage is already fucking done. And that's what we're trying to kind of expose right now. Really, exposing is a different thing, right? Because exposing is like one thing, but what we can do about it, this is something that Biggums and I preaching is like, hey, we can start getting, like us, a lot of our money, like being like retail, is using these ISDA banks. And I understand that it's not that easy to pull your money out of banks, et cetera, et cetera. But if we can start making a dent in pulling our money out of ISDA banks, not using them for loans or things that we want to purchase, et cetera, then if we really believe there's a liquidity crunch right now and we start pulling monies from these banks, that's when we really fucking hurt them.
I think you would. I think you probably would make a difference. I don't want to stay on the topic for too long, but I will say that both TCF Bank and Bank of America were very upset when I took my business elsewhere. So it could potentially, work in your favor to get your money out of the bank that's playing against you in the stock market with your very own deposits. But let's take some more questions. Can you guys get somebody else on here, or if you guys have any questions? Adam Aaron, thanks so much for coming up, brother.
I appreciate you.
Yeah, thanks for having me, man.
I'm gonna put Twist up because he's been waiting for a long time.
Sounds great, bro. Bring him on up.
Boss, in between, when you're not speaking, mute your shit, dude. You're making Randall echo pretty bad.
That was Adam Aaron. I noticed it popping up on mine as well.
All right, so I brought Twista up. He was waiting for a long time. What's up, Twista?
Oh, what's good? Kit Kat, what's happening? Yo, the big dogs in here, man.
Hello.
Yo. It's always a good day when I see you, Kat. I don't get to see you that often, man. Yo, so I think a lot of what you guys are talking about, man, that's kind of been my whole belief since the beginning, man, in terms of like the AMC squeeze. But I think about it from an aspect of they kind of walked us into this play. I feel like there's a market restructuring happening, and the small caps kind of they're going to play a part in that restructuring. I think when we're hearing like the collapse, I've always looked at it from a perspective of, well, it has to collapse so that they can rebuild it, right? I think in the current time we live in, right, technology is in the hand of retail traders, right? So there's a lot of players that they don't need anymore that they did need 5 years ago, 6 years ago, 7 years ago. And I think a lot of the money that was given and kind of like how this whole thing played out, I think it was a restructuring, right, from a market that was already broken, but they kind of just had to keep holding that market up. So I think we see this kind of like end in a situation where more or less a lot of that money gets burnt back off, right? And they walk away, the government walks away with more control over the markets, and there ends up being more transparency. Will it be 100%? No, I don't think there'll ever be 100% transparency in the market. But I think that when we're hearing that, I also believe that we'll see things kind of bounce back fairly quick. And I get some people probably won't agree with that, right? Probably think 5 years, 6 years, but I think within the 3 year spans, we start seeing things kind of come back after that. You know what I mean? And I would love to hear y'all opinion on that whole thesis, right? Because I've been kind of like saying this for the past year, you know what I mean? And that's been my viewpoint. And I remember there was a time we used to talk about market crash. People like, yo, you can't talk about that, man. You're gonna freak people out, bro. Chill out.
I agree with you. I want to give, I guess, Biggums has been in here. He's been muted. I want to give him a chance to respond. I don't want to monopolize the chat. Biggums, you there?
Yeah, answer this question. I'm literally in the middle of something. I'll be able to talk in like 2 seconds.
That's cool, brother.
All right, Marcel, you want to take this, or I can take it? It doesn't matter.
Twisted, thanks so much for coming up and talking, brother. Appreciate you. Yeah, it's a great question. People all keep asking when we're going to bounce back, and that's. I wish I could agree with you. I wish we would have a strong bounce back, but the things that lead me to believe that that's not going to be the case is that interest rates can only go up for homes, and that's going to price Americans out of the market for a long, long time. Many people are going to be filing for bankruptcies, and that's going to keep them out of homeownership for at least a couple of years, as well as the price of homeownership continuing to skyrocket. I believe that when the market collapses, the Federal Reserve is going to have to bail out all of these banks for the most part. Some of them will probably go under and be purchased for pennies on the dollar strategically by other banks. But that being said, the economic strength is not there. The globalization is not there. The industrialization is not there. We're getting segregated from Asia and Russia, China, etc., and pretty much starting to do some really heavy trade with Europe to the point where the United States dollar is going to strengthen to the euro because of the dependence of European trade with America on oil and gas and coal and such. So this economic turndown, everyone's going to hate me for saying this, but it's going to be the most disgusting thing that any of us have ever seen in our life. It's going to be the Great Depression 2.0. And I hope everybody disagrees with me, and I hope that's not the case. But I've done enough research on this to figure out that that's where we're fucking going so far.
If you don't mind, I'll add on to this. Biggums and I have been looking a lot at like some of these ISDA rulings, and like again, when I say ISDA, don't look at it like it's just the United States stock market thing. This is like the head of all the banks of the world, like the biggest banks. They're all a part of this, right? And they're pushing rulings that I don't believe that are coming from us, right? Like other countries, other nations are pushing these rulings that are saying like, hey, we need to have people post more collateral. We need to have more transparency. Like the clearing rules are not really clear. Like who's actually clearing all these, these trades, who's settling all these things. And the fact that other countries are getting concerned with that makes me a little bit more fearful, because it's like everything's backed off kind of like what we're doing, the U.S. is doing, and these guys are coming to us and saying like, hey, this shit is kind of getting out of hand, it's getting kind of scary. And that's really, I think, why we're trying to bring all the attention to this, because if other people are seeing it, that means that we definitely do. And so it almost makes me feel like we're riding a sinking ship. And so that's really, I think, the core of all this, like what Boss is going to say, it's like, hey, this is our hedge, like AMC, GameStop, whatever, our beloved stocks that we know that are fucking short of the piss. I mean, this is our saving grace, because all of us are aware of what the fuck is coming, and it's not just us. I mean, the other countries, other nations are seeing this. These are the guys that are saying like, hey, we need to make some sort of regulation, some sort of fucking rule to prevent this shit from happening. So they're seeing the glacier right now.
Yeah, and then I'll add on a little bit too. So about the reform and everything like that, the CAT system is going to be a massive step towards that when it goes fully active. It's actually going to stop a lot of these market maker exclusions. And you guys already saw Citadel has $60 billion worth of securities sold, not yet purchased, and that's because of their exclusions. Phase 6 is going to start affecting ISDA members and their collateral, and right now they're able to use credit support as collateral, which means they don't need to do any kind of deposit. They just need to show that they have that collateral. So right now it's like an infinity money glitch for these guys. They just, whenever they need shares, they can go into ISDA, dip into it. We will never see that, and this is the problem. Everybody stares. Everybody wonders why we haven't moved so much in like the last couple months. We're all staring at the wrong problem. This is why I call the bank magicians. We're all staring at the trick instead of the guy pulling it off. We're all looking at market makers and hedge funds like they're the bad guys. And think about this. In 2008, the banks destroyed the entire economy, and what happened? One guy went to jail for 30 months. That guy's already out. He's already back in banking and making millions of dollars, probably got a payoff. And then what did we do? We paid them money. That was their punishment. We gave them bailout money. We go, here you go. Since we got to bail you guys out, here's more money for doing the worst crime in fucking United States history. So That's a massive deal, and obviously
Hell
what
yeah.
did they do? They go, how can we keep doing this but get smarter? So they go, let's do family offices. We can get around to all the regulations again. So just like everyone else, they evolved. They did the same thing. These banks, like I said, why would they learn if all we did was give them money last time? And on top of that, they made it so ISDA controls the market, ISDA controls the OTC market, but the market can never control ISDA. We never see any of that information. And they're also in charge of regulating it with the DTCC. So if the banks are in charge of regulating it and they're in charge of looking at everyone's collateral, guess who's going to have to margin call everybody? The banks. So if the banks aren't hurting and the banks don't need money, they're never going to margin call these guys because they're all doing little back handshakes in these master agreements. This is why we need to attack ISDA, because right now there's $488 trillion in the derivatives market, and we need to bring that to the light. If you guys want a MOASS, you make the banks start covering those trillions of dollars, those hundreds of trillions of dollars in the derivatives market.
And what I'll say is, and I'll link this tweet, I'll have to tweet it, but all the shit, like how we can assimilate kind of all come together when it comes to like SEC filings and, open comment shit. ISDA is open to open comment outside of just ISDA members. And these guys, the ability that we have that, remember, we're basically being allowed, they're soliciting for us to comment. And these guys are fucking, the actual ISDA members are like billionaires over on top of billions, right? This is the biggest of the big. So the fact that we have the ability to go and comment on these things is a big fucking deal. And again, I don't think it's encouraged by the United States. I think it's encouraged by these other nations that are seeing like, hey, if the U.S. topples over, we are going to be fucked. So it's becoming a concern for them.
Yeah, exactly.
Let's grab some more questions if you can bring somebody else up.
Okay, let's see what requests we have. Liz Clayman's Whistle, I guess, is next in line. She's been waiting, or he's been waiting. I'll bring him up.
In mad respect for Liz, thanks so much. I've been seeing you around for a long time, so we appreciate your support.
Oh, you're welcome. Thanks for having me.
Absolutely. Did you have any particular question or anything you wanted to talk about? More than happy to discuss anything.
No, I mean, you guys are talking about 2008, and I lived through it. I don't know how many people actually were, I owned a mortgage company at the time.
Well, I'd love to hear what you have to say, because I was in real estate. I was a real estate broker in the years preceding 2008, and it was a hot mess. We made money and stuff, but let's just put it this way. A lot less people were buying and a lot more people were renting for many years. So what can you tell me about your experience as a mortgage broker in 08?
Well, I also have been in commercial real estate for almost, 30 years, and in real estate in general for 40 years. And so I got in 1980 when I was 18 years old, and so I've been through quite a few of these downturns, and I've always been able to, fortunately, been able to advise my clients when to get out, and I've been telling all my clients, time to scale back or, think about getting rid of portfolios that are a little, could be affected by a big turn down. There's a lot of problems on even these self-storage units. People are not paying their bills, and they're not. You might think that they're foreclosing on those units. A lot of them aren't. They're letting the bills just ride.
You think that way they can get bigger charge-offs in the future? Sorry, go ahead.
One of my biggest clients, he's like one of the biggest self-storage unit owners in the country, and I know for a fact he's not kicking people out if they're not paying.
Yeah, you told me about that. Very similar happened in New York, where a lot of the fronts for their commercial real estate were not able to keep up the payments. So they went to the landlord saying, "Hey guys, look, we can't keep up the payments. We're gonna be out of here." The landlord said, "All right, look, sign this NDA. You guys pay 50% less, but just you cannot tell anybody else that you're paying less." the front gets held up as if the price is the same. So anyone else wants to come in and buy, they have to buy at that top price. But the landlords are actually not receiving that top price coming in. Like it's scary.
They're actually offering people to pay them to take their stuff out of the storage and forgiving the bills, and they'll help, and they'll even give you the truck to move your stuff out.
Yeah, that's one of the issues. I didn't mean to cut you off there. That's one of the main things that I've noticed a lot is a lot of people are coming out of mortgage forbearances and they're still not able to afford their homes. They're in deeper credit card debt than ever. If statistically and dollar per dollar, Americans are in more debt than ever in history. Our disposable personal income decreased 5.6% in the fourth quarter of 2021 after decreasing 4.1% in the third quarter of 2021. And this is going to something that's continuing because the government stimulus is gone. More and more people are unable to keep up with inflation. So there's going to be less disposable personal income, period. And therefore, many more people are going to be defaulting on their rent and mortgages. And because of tenants defaulting on their rent, landlords defaulting on their mortgages, if they own several homes or several properties and are unable to pay them all at once. Meanwhile, their tenants don't have to pay for 6 months. And, these eviction moratoriums are expiring. The economy is not where it used to be. So when you bring up things like your experiences in mortgages, I really take it seriously. So thanks so much for telling me about that. What do you see right now as far as like the housing market? What are your thoughts?
Well, there's so many people that are not able. I mean, they're not able to keep. I based my business out of California for a long time. I'm in Texas right now, but so many people are closing up shop and moving out of California, and people I've known that were doing really, really, really well, especially during the lockdowns, that lost their businesses and are not coming back. They're not coming back. They've been destroyed. So that's a lot of people that are just literally getting by day to day, that were very successful. I see a lot of people that are losing their homes, a lot of people that are even, big money, they're dumping their portfolios. They're getting, and when they say, "Oh, don't worry, we're just, we're not trying to cause any panic," and it's like, yeah, you are. They try to tell you that they're not, but they are. They're getting rid of their holdings. It's just like back when Arden, which was one of the largest landlords in the United States back in 2006, literally sold their entire portfolio in 2006, and I watched them literally tell the CEO say, "Oh, there's nothing wrong with the market. Everything's fine. We're just gonna just get into a different type of business." And they got into the hard money business, is what they got into.
Aggressive lending. It makes money.
Right, and then Sam Zell sold his company, Equity Office Properties. He sold his in 2007, June or something like that of 2007. And I was just literally I closed a hospital on July 7th, 2007. So 777. It was the only property in our portfolio with me and my partners. Because I reopened a hospital in Monrovia, California that had been closed for 5 years. And it was the only thing in the whole portfolio that made money.
At least you did well. At least you made a good choice there, because I know a lot of people did not. And the difference was that at the time, none of us saw it coming, really. We had no idea what mortgage-backed securities were and what these collateralized debt obligations were. At least not most people. I was in real estate. I had no idea what it was. I was not a banker. I was not a mortgage broker, but I had no idea, at the time.
All my clients didn't. All my clients, my top clients, some of the biggest property owners in California, I'd go in their office and they would go, "Look at all these," they were saying, "These are like, rehypothecated, 36 times, and we're ready to start selling our portfolios right now. And so I started alerting other clients, and I'm saying, look, I got some big clients and they don't ever dump, and they're dumping, and they're starting to quietly do it now too.
Yeah, I've seen it all over the place. I think people are finally catching on that it's the same problem that's been continuing to get pushed around, and unfortunately, it's something that we're going to have to deal with. I think that too many people don't want to deal with politics, and they don't want to think about the collapse of economies and countries and war. But unfortunately, when you deal in the stock market, you deal with all sorts of corruption and crime, geopolitical and macroeconomic events that you have to look at. When you invest in a company in the stock market, you don't just go, oh, I like this company. You have to think about everything about it. And everything in the world is going to affect this company. Therefore, we have to keep all these things in mind. So I appreciate you sharing your information with us, Liz. Thank you so much for that. I definitely learned a lot from you. So appreciate it very much.
Thanks a lot. All right, so we'll bring the next one up, boss. It looks like it's a gentleman named Ripple.
What's up, Ripple? How you doing?
Ripple, you there?
And if you're just joining us, we've got Randall Cornett, the Masked Investor, AMC Biggums, and Cat Striker hanging out with us all right now on a space call here, answering questions regards to AMC, GameStop, and whatever macroeconomic perspectives we can offer. So that's where we stand.
What's that? It's going to piggyback off what everybody else is talking about. And I tend to agree with Butcher. Like the last 3 years has just been a build-up to what we're going to see on this next one. Unfortunately, it's going to be pretty devastating to a lot of people.
Hey, Ripple, you sound like a broke.
And, just kind of light it up, buckle it up, and,
Ripple.
So thanks for having me.
Hang on one second.
So AMC, go GameStop, do a little bit with crypto, so do believe in the next.
All right, we are having some technical difficulties, Ripple, my friend. I am sorry. Come back up here in a moment, please. We'll add you back up.
Oh yeah. Okay. So now we have a bunch of requests. The first one is Rogue. Okay, he's already up. Let's go.
What's up, Rogue? Rogue the Legacy? How you doing, brother? We got Rogue the Legacy that just joined us in the Twitter space call.
Rogue, you there, baby? What's
Hopefully
up?
you can say something here.
Oh, he's a listener now. Okay, we'll bring the next person up then. Shamrocker.
Vietnam, while we're waiting, do you want to ask a question?
Yeah, I had a question.
Go ahead, brother.
The globalists, they want a one world currency, right? So do you think that it's possible that they're crashing the entire economy in order to get all the Federal Reserve notes back?
I don't know if that's the purpose. I don't think that they want to crash the economy or the stock market. I think that they just have no choice. That's why the Fed keeps saying that they're trying to bring it in for a soft landing. But the point of it is, at the end of the day, to implement the new digital currency, period. They're probably going to back it with some sort of tangible, I guess, like gold or silver, and, kind of like it used to be before they created the petrodollar. But I don't know yet. That's just what I believe at this moment. The new digital currency is going to be the absolute worst thing that could possibly happen to Americans. If you owe taxes or alimony or child support, you won't even see your checks. They'll take it directly out of your bank account, whether you've got to eat or not. So it's going to be one of the worst things. And I'm not saying I support not paying your child support or anything like that. I'm just stating a fact. If you owe the government, $1,000 in taxes and you've only got $900 in your account and you need to pay your mortgage and feed your kids, you may not get the chance because they're going to take that money right out of your fucking digital bank account. before you even get the chance to see it, the microsecond that your check hits from your direct deposit from your company. So it could potentially put Americans into a worse financial crisis overall if you think about all the implications. If they deem it necessary that you aren't able to file for bankruptcy, they could take every dime you have right out of your bank account, whether you like it or not, to pay your debtors. It is a disgusting overreach from the government, and it's something that I think is coming, and it is inevitable. And I will try my best to refuse to use it somehow or another. Not sure exactly how that is yet.
Marcel, I 100% agree with you, man. I think it's the worst thing that could happen to us. What even scares me more about it is the fact that, like how we're talking about like Chinese bonds being used against us. It's like, okay, if they have this digital dollar, who fucking knows like how they're actually going to use that when it comes to the financial markets in terms of collateral and leverage and all that fucking different shit. It's like, and who's going to really be able to verify any of that information?
No, you're absolutely right. And that was a great question too, man. I appreciate it.
Yeah, Vietnam, nice work, brother. I appreciate it. So
Yeah, 'cause I was gonna say, if we don't have bills to pay for things, so like, and there's not enough gold and silver to go around, I guess. So, because they're stockpiled on all that stuff. So if we don't have the actual bills to pay for anything, then how do we get anything?
Oh, well, you'll be forced to sign up digitally on your phone or on your computer to this digital currency. You'll have to download like a hard wallet of some sort or use a soft wallet website, like digital login type thing, and it'll be linked to your, it would probably be linked to your driver's license number, your social security number, your birth certificate. Everything would be linked to this digital dollar. The government would know everything about you and every dollar you put into it at any moment. It would be like a debit card type status kind of thing, or even worse. You're going to see in the future, and I know a lot of people are going to think this is crazy and conspiratorial. You can keep your tinfoil hats on, but right now there are people in, I believe, Sweden, and they're having parties in which they're digitally implanting microchips into their hand, into the palm of their hand. If you can Google it and see people like literally having parties doing this shit, and it allows them to use their hand as a wallet and such at grocery stores. So now they think it's amazing that they don't have to carry their wallet anymore. Look at my microchip. And this is something that's real, and people are deeming it the same way that we used to have, and probably a lot of people still do have, like tattoo parties in which a bunch of people get together and a lot of people get the tattoo at once, or ear piercing parties, things like that. Now they're doing implantation parties, and this fucking implant could be a way for you to do that.
Yeah, I watched a documentary on this, and it was interesting.
Go ahead.
A little bit scary, and also very stupid. I saw a lady who implanted.
But I think it's fucking imposing on all of our rights and shit. I'm not down with it. I'm gonna be the guy that's like.
Okay, we got audio now, right?
Yeah, we can hear you.
Awesome.
I'll be the crazy dude getting pulled away, probably naked out of the shower, and I ain't getting no fucking chip in my hand. Fuck that.
Thanks so much. Yeah, you're absolutely right, dude. I'm not going to use this fucking digital dollar. I don't know how I'm going to avoid it. I'm going to do my best to, if I have to, take my business overseas or not deal in it. I'm not sure exactly what I'm going to do yet. But definitely not looking forward to any sort of digital dollar in any way. You know, I'll take my tangibles, and I'll take my crypto if I have to, whatever I deem to be of value, my precious metals and such. And I'm glad somebody brought that up, because the precious metal squeeze of silver and gold is going to be one of the most ridiculous things that people ever see in their lives. I think things like palladium and silver, and look at what happened with nickel going from 50,000 a ton to 100,000 a ton, you know, and then the trade's getting reversed by London Metals Exchange. When this thing gets out of hand and markets collapse and prime brokers start calling in all their borrowed shares, like BlackRock's 40 million shares that they've lent out to companies like Citadel and Virtue and State Street and Susquehanna, when these things start getting pulled back, all this, it's going to be a race to see who can sell off their assets and junk bonds the quickest, and who can close out their short positions the fastest, in order to be the first ones to, you know, be able to swim. They don't all want to sink, but currently there's a quid pro quo in which they've all got to continue to work together. But I don't mean to continue going on a rant. Let's get some more questions in. If anybody has more questions, I'd love to take them.
Bring in some questions right now. Yeah, and I agree. It's a game of fucking hot potato. The top of the list is that guy. I'm bringing him up. Thank you for everybody that's been chatting with us. Really good questions, everyone. That guy, you're up, baby. Let's go. It's time.
Yeah, just more comment, just to get like a different take on it. It is going to be to contest kind of what you're talking about with the chip thing, but didn't they kind of try to attempt that with this vaccine business, but not everyone took it, so it wasn't forced? Just for this country, I get it, you guys are talking about over there in China, but that's totally different governance than what it is here in America. So
could you explain your question?
Sure.
Could you explain that question one more time for me?
Yeah, because you were saying about the chip and then connecting it to a digital wallet with the chip, but that would be over there across the country, but not necessarily here for America, because the vaccine, did they not try and attempt to do that, but not everyone took it, so it's not necessarily forced.
Absolutely. Let's say here, but you know what? Here, the vaccine mandates are literally forced.
Oh, Canada, my bad.
Right, but like vaccine mandates here in the States and in Canada are forced. You know, Biden has re-implemented the vaccine mandates 3 times. That means you need to get this vaccine in order to work. So what makes you think that they're not going to make you need to get this digital dollar in order to get paid? And I don't mean that as a smartass. I mean that like truly. Like, what makes you believe that? Like, they already mandated the vaccines, and the what is the word I'm looking for? The Supreme Court repealed it 2 times. The Supreme Court repealed it. Once because OSHA did it, and once because the CDC did it. And now Biden re-implemented this vaccine mandate again for federal workers. Like, you see what I'm saying? Like, they're gonna keep playing this dangerous fucking game in which they're taking our fucking freedoms. And God, I can't believe I'm saying that. Go ahead.
And I get what you're saying federally, but I live in the state of Florida, so it's a little bit different when it comes to state jobs. So federal jobs, I can say that, but then that becomes a separation between it. Yeah, there are different benefits to working different jobs, but then it becomes a separation between it. All I'm saying is more just in a sense of it's not a complete takeover for mandates like that, but there is an aspect to it taking over their reach of what they say it can be. So there is like little nuances and splitting hairs between it, but that's important just because here in America there is that separation for that reason.
Yeah, I understand what you're saying, and I do agree with you. I do believe a lot of people will fight against it, and that's what I'm hoping for, because I think it's a terrible thing for everybody. All I'm saying is don't be surprised when the narrative comes around that there are now mandates and people are required to not get a chip implantation, but people are required to use a digital dollar of some sort, in which now, look, every transaction that you do in the bank that's over $599 is sent to the IRS, every single one. So
yeah, my assumption with that is that they're going to use it through the taxes, exactly how you're saying.
Exactly, and what do you think?
The digital dollar, because like we all got to do taxes, right?
Exactly,
so,
brother.
If we're going to be getting our refund to get our tax money back, they're going to say, well, they're going to somehow incentivize it for that, so that way it can offset it using that CBDC that they're trying to implement. The whole thing that I find, though, is that...
And if you want government assistance, you're going to need it, right?
Yeah, because it's just a forced way to participate in their economy in that sense. But it's not forcibly going to be that way forever. Because you can, it's like foreign currency, right? With cryptocurrency, where you can just transfer out of the currency from one not blockchain, but one type of currency to another. So it's forcibly participation, but it's not forced to stay there, if that makes sense. So there are loopholes, there are holes to poke into it from the decentralization of what crypto does, but it is challenging in a sense for you to have to do it. But yeah, I'm waiting to hear and see what's going on with that. I've been paying attention to it so much, and I'm not going to lie, I'm kind of excited of me being able to talk to someone about this, because I geek out. But I try and poke holes to see exactly what they can do, and then what really is plausible from my aspect, and what, is going to be forced on me, and what I don't need to do.
For sure, brother, and I'm with you 110%, dude. I appreciate you, man. That was a really great question, and you make some great points. So thank you for that. I definitely take that, consider that, and think that everybody views it differently, and I'm hoping that's not the way it goes. To be honest with you, but that's just kind of the way I'm feeling right now, and I wish us all the best. I wish us all peace and wealth, that's for damn sure, and I don't think the digital dollar is the way to get there. But thanks so much, brother. Appreciate your question. That's awesome. Hey, Pam the Trader, thanks so much, everybody, for being here. Shamrocker, you got a question, brother?
Yes, sir. First off, shout out to you, Cat, TMI. I see Jackson down there. He said AMC Biggums. Shout out to everybody in the AMC family. Listen,
Thanks.
with the CPI coming out tomorrow at 8:30, if we're like 2 points short, like we're already forecasted in a bad way, which I'm sure the market already has adjusted in. You know what I mean? But if we're 2 points, 3-4 points over, do you agree with me that small cap stocks tomorrow just bloodbaths for foreseeable future, especially with the Fed talking about raising rate from 25 to 50?
Yes, I'm looking at futures right now. NASDAQ futures are down 0.5 percentage point almost. Dow futures 0.31, S&P 0.4%, Russell 2000 0.3%. So that means the markets are going to gap down first thing in the morning. However, they're not even really reflecting it yet. They're just getting started, in my opinion. And we're gonna, if the White House is coming out and literally stating we're expecting extraordinarily high inflation numbers for this month, it's going to do some very interesting things to the market. I do suspect it's going to be a very bloody day. But who knows? The plunge protection team might come along and dump another $50 billion in naked shorts on the volatility index in order to cause a gamma ramp on the SPY to save the market, just like they did on January 26, 2022, in which a 13% drop on the SPY was immediately bought back by volumes traders and algorithms because of these algorithms that had to buy back because of the $50 billion short position that was taken out by the plunge protection team, which uses the ESF money, which they're not supposed to be able to use technically, in order to save the fucking stock market.
Well, the plunge protection team, I mean, they pretty much fucked us last week on AMC, in my opinion. I understand, the rules, but a penny short, I feel they're all positive, but I'm not worried about these tomorrow. And for the next few days, to be honest, because, I don't know, we'll see at 8:30.
Yeah, brother. And since we're on the topic, I'll fill everybody in right now. The most up-to-date information is that the Biden administration is bracing for the Labor Department's CPI to show that inflation is extraordinarily elevated. They already know what the CPI is. That's why they're saying this. They're trying to, get people ready so that they don't overreact when they see this ridiculously high number. The Consumer Price Index, or CPI, we can call it CP lie because that's all it is a fucking lie. It's Wall Street's favorite way to measure inflation. For those of you that are unaware, the CP lie report, the actual calculation used to come up with the percentage was changed as of January 1st, 2022. And it was changed in order to reduce the weighting, the percentage weighting of energy and food, which are the two highest things that we're paying for as far as in terms of year-over-year inflation. The reason they did this was that so the CP lie would look lower than it truly is. Go ahead.
We're about to experience the highest or the lowest drop, the biggest increase in CPI in 40 years in a 1 month period. From last month to this month.
Exactly. And right now we're saying 40 years, and pretty soon we're going to be saying 60 years, and pretty soon we're going to be saying since 1929. You know?
And that's if we hit their underrated projections that they're just low to try and keep the markets.
Yes! Thank you! Their fucking projections are always underrated. The SIBO reports, their projections are always bullshit. The projections are we're never even close.
Coronavirus reports come back around because that's another reason for them to pull down these fucking stocks. That's how they do this shit every fucking time. Every time. Past 3 years I've been in the market, it's you know, except for I did get surprised on the war.
Where'd it go?
I got a little shaky in the morning and sold off a little bit too much, and it bounced back because, you know, the uncertainty was over. There was certainty that there was war at that point, you know. That's why the market bounced back in the afternoon, big part of it. But I'm not going to take no puts on motherfucking AMC or anything. I'm just saying it's...
I think this too. The interesting thing is this, right? If that would give you an idea for what the CPI data is supposed to come, or as I guess a new coin terms is CP lie data. I might use that tomorrow. It's pretty funny.
Yeah, brother, do it.
The CPI data could come out tomorrow and it would actually be okay, which means the market would have overreacted to the downside. It gaps down, 830 hits, and starts to go back on a run, and then the Fed reacts and makes a statement. At which point in time, if the CPI data is too bad and the rate hikes need to come back down, the market goes down at first, the Fed talks, the market goes back up. If it's the inverse, the CPI data is not as bad, the markets go up, the Fed says we're going to go to a 50 basis rate point hike, and then it goes back down again. Either way, tomorrow the market's going to be a wave, so be very careful. It's going to be it's going to be shaky, and we don't know when the Fed's going to speak or when they're going to make their statement. It's not a planned talk per se.
No, they said 8:30 a.m. is the CPI statement.
Exactly, but when the Fed talks tomorrow, we don't know when.
Yeah.
Jerome's talking tomorrow?
Yeah.
No. When they make a statement.
Oh, Christ, what's he talking about?
A statement. They're going to drop
a statement on the CPI data because they said they're going to base the rate hikes based off of the data that comes from the economy, which is CPI data, which is the
that's a lie.
Which is the right. So the 10-year, the 5-year break even, like there's different stats they're going to be looking at. This is one of them. So whatever the market reacts to, I'm prepared for the market to do the exact inverse after the Fed opens their mouth.
You know what? And talking about that exact same thing just now, the SIBO estimates in 2011 that were given regarding the value of the 3-month Treasury bill in 2021, they were estimating that the 3-month Treasury bill would be worth a 4.4% return. In reality, right now, it's at 0.06. Okay? In 2011, they had projections.
So close.
Yeah, right. That the 10-year Treasury note bill rate was going to be at 5.4% for 2021, and the 10-year Treasury note was in July of 2021. It was 1.24%.
One more quick question. Why do you think? Because we all have opinions, and you know, together the opinions can come up with a solid idea of general what it is, but the way the freaking crypto dumped the past 2-3 days, do you think that's in anticipation of liquidation for covering shorts, or do you think that's just because of now Bitcoin and Ethereum basically run with the market, basically?
I want to look at it like, I don't know if I want to cover this, but I want to look at it like this. The way that the SPY moved today, I don't know if you recognize it, in the back half of the afternoon today, there was very little movement in the market, almost as if the market itself was bracing, right? So the way I look at it is like this: when you see a little bit of pullback from crypto, it's listed as a highly risk asset, like a risk-on asset, right? So
it's not a pullback. It hit over, Bitcoin hit over 14% in the past 2 days.
No, agreed. But what I'm saying is like that's the pump before the dump, right? So you might see that happen, and you'll see people start to buy in because retailers buy when they see green and sell when they see red, which is the inverse of what should happen. But you see the sell off, and then you see the SPY doing nothing. To me, big money pulled their money from the market, and they're just bracing to see what happens next. Not all big money knows what's going to happen tomorrow. Some do, like the 1%, the 1% do. But a lot of people that have a lot of money pull off the risk, and they wait on the sidelines for the news to drop. So I think we're just seeing people who have invested heavily in crypto wait. We're seeing people who have invested heavily in the market wait, and we're going to see what happens tomorrow.
I mean, I personally pulled my crypto today
there you go, big win.
Just because I wanted to. Yeah, yesterday I emptied out one machine, all the cash I had to find another one and lay Sunni and Jay to fucking pull cash out of that one, and it's all going to fucking AMC and fucking GME. Straight up, and I dumped so much money into them motherfuckers. I almost wish I sold June 2nd, but I don't because it's built a lot of fucking character. But I'll be damned if we don't pick up them $72 apes. We made that promise, but that was you guys.
Did you guys know that in 2011 the projected CPI right now is supposed to be at 2.3%, according to their projections at the time? And as we know, it's probably the estimated projection for tomorrow is supposed to be 8.4%, not 2.0, not 2.3. So if they're expecting it to be extremely inflated, it might be well over 8.4%. I hope it shocks the markets because people don't understand. I don't want the market to crash. I don't want this to happen, but it's an inevitability that is coming, and the sooner we get this bubble out of the way, the less people that will be affected. Every day that it continues, the more people that lose money to inflation and to these junk bonds and to further over leveraging. I don't even have to get into it. If you've been watching this channel, or any due diligence, any channels on AMC and GameStop or anything on the stock markets, you're well aware of what synthetics and naked shorts and rehypothecations and bank over leveragings and short hedge funds are doing, and they're all fucking the market to hell. Plain and simple.
The ETFs, the fucking Guatemalan and the Brazilian fucking, yeah, I get it. I'm with it. It's just, one more thing, and then I'm done. I'm done after that. So the options chain, you can only buy up to like $40 or $50, and then all of a sudden in June I see it jumps up to AMC. You can buy up to $160 strike prices. Is that an indication like that we're gonna fucking jump again, or is that just like
the market maker? I can let these guys explain, but the market maker creates more calls and strike prices. Call put options for strike prices as needed based on the demand. If the demand's really heavy and the prices start getting very high on them, then they can increase the call price strike prices in order to create more liquidity and get cheaper call options and be able to make more money off more retail investors. Yes.
Yeah, all the puts that have been bought lately actually made calls cheaper right now. So fuck it, go along.
One thing I want everyone to know, I personally believe that the fact that you got to remember that AMC and GameStop are in like the Russell 2000, the Russell 1000. And so when the market goes down and these Russells get pulled down, these indices, they pull down everything inside of them, including AMC and GameStop. And because we know everything about AMC and GameStop is accelerated and exaggerated, we should expect that it's probably going to come down and give us better buying opportunities. So yeah, as the price goes down, you're going to see the price of calls get cheaper, and I hope it gives people the incentive, and I hope people remember how much money they made and how much those calls were worth. Because I remember in June,
it's going to cover such a small price that it's not even really going to be worth it unless you have enough call options. Not everybody does.
No. I think any call option could be worth money. I don't think that weeklies are a great investment, but that doesn't mean they can't pay off. But, far dated calls out, things with good theta, things that have good theta, and you've got good intrinsic and extrinsic value, I think are very, very good for a stock, especially like AMC and GameStop. And you need the gamma and delta hedging that happens during margin call situations with options chains. So the higher the options, the open interest on options, and the more people that are buying calls on AMC and GameStop, the more delta hedging that's going to have to occur when these margin call scenarios finally happen.
That's why I always buy my call options already in the money.
Here's where I disagree with you. I love that idea. I like that. That's great. However, they're very expensive, and they don't provide a lot of leverage. However, if you buy guess here's one thing that people don't understand about calls. If you buy $145 AMC strike price calls, market makers have to hedge for that when margin calls happen. Why do you think the prices are going up? Because they're not fucking delta hedging, and they're not closing their short positions. They're selling naked calls, and they're only delta hedging on days before run-ups. Like when.
Well, and they're getting all the premiums from the $145 strike price that we potentially may not see by that.
That doesn't matter, not necessarily, because a lot of times people are buying things from other retail. If I might sell you a call without knowing it, you know what I mean? So.
Yeah, it's exciting to another room, man.
Fix your mic. I don't know if it's this
Marcel, your mic
or what.
bro.
Interesting. My mic is acting up.
It sounded like you walked away or something.
Sorry, I'm here. Can you hear me okay or no? Still.
No, it's not.
Still a little scratchy.
All right. Is this any better? Because I don't know if I connected my Bluetooth or something a second ago.
It's better, but you gotta raise the volume.
Interesting. Hang on a second. I'm hesitant to try to end this call. I don't want to end the space call to try to reset Twitter. Let me know.
You're back. Good.
All right, great. But anyways, they have to delta hedge when margin calls occur, period. And so they're not hedging right now because they know that they can commit wash sales and spoof the price and pin the price down, continue to release new synthetics. So the premium that they get is not just from you. That you might buy it, you might sell a call or buy a call to and from a market maker, or you might sell one to me or another retail investor, and that's normal. $145 strike price is not bad. I just think buying them very short term is a pretty shitty investment. I like giving yourself theta because theta decay is very, very heavy in the last 30 to 60 days of a call contract, particularly the last 30 days.
Sure.
So yeah, I think they are great investments because I know I had June calls before. In May, I bought calls for June for AMC, and they were deep out of the money. And I remember those things going from $50 to $100 when I bought them to $5,000 to $7,000 a piece. And that was at $72.
I had strike prices in September before June happened. I was fucking loving it.
All right, let's bring someone else up. Appreciate you, Shamrocker. You're the man, brother.
Yo, I don't know. Is it just on me? TMI, I'm gonna lean on you. Is his mic still fucked up for you?
Nah, his mic's still fucked up.
Yeah,
his
his mic's fucked up, dude. I had to put my pin straight because it's fucked up.
But you know what? I do want to add on something quickly. Well,
Try changing things up a little bit here.
fucked up. I think we have to just touch on general greed, right? And not greed as in people are greedy, just as in the amount of money that people spend on YOLO options sometimes can definitely go. If people were to spend the same amount of money spent on YOLO options buying 2024 AMC calls, obviously hindsight's 2020, right? But you would own much less calls, but they would still be worth something. Like the way that people do buy calls sometimes is to get rich quick in a play that people have been in for a year, right? So my thing is like, if you miss YOLO calls and you own shares, your shares will go up 10x what they are right now plus, right? So like there's like you guys already have a hedge to the upside to the point where I don't think people need to get into call options as heavy as you need to, right? Like people are saying, well, my call option went up 10,000% before. 10,000% is a large amount of money, but the amount of money that people are spending on YOLO options right now is like, if this thing went up $10,000, that would be legendary money even without the shares itself. So I mean, pacing ourselves, being aware of like what what we can afford to hold on to and cutting our losses. Hey, look, this is not the squeeze this week. Cutting our losses before the options go to zero, as some of our companies have done before, right? Like, there's a few things that people can do to put themselves in a better situation. And don't be afraid to say, okay, look, this week was a bit of a fuck up. Cut your losses and move on to the next one. That's a big part of it.
I agree with you, man. Like I said, I mean, people are. I guess at the core of what you're saying is, look, nothing in this life that's worth having comes easy. So don't expect to get fucking rich over a call option that you place, on a fucking Monday that's going to come through on Friday, and expect that you're going to away a fucking millionaire. It's unrealistic. We got to put it right. We're all doing it right now.
Exactly, and mind you, it can happen, but to me, it's like if you've been looking at a play for a year, people, we know if we see the volume up over 50, 60 million one day and the next is up over 100 million, chances are some positive momentum's coming. We know the signs. In my personal opinion, it's not going to hit us from 30 million trading volume one day to $1 billion the next. It's not how it's going to happen. If it does happen, you guys can call me. I fucked up, all right? But, like, realistically speaking, it's one of those things where when it comes, we're going to be able to see clear-cut signs. We might not be able to get it as early as we would like to, but the amount of money that we could save by not jumping in at every single 5% run-up would save us a substantial amount of money as a collective, which in turn would add buying pressure to the overall community by simply saving money that we don't lose on call options.
Thank you.
I agree with what you said. I agree with what you said, and also not giving the premiums up to the people that are our direct enemies either. Like,
yes.
Don't give them fucking any extra fucking ammo to use against us.
Yeah, because like buying in-the-money call options, when the stock starts running, buying in-the-money call options would be deadly when the stock starts running. But if the stock's not running and you're buying in-the-money call options, it is costing you a pretty penny, where, yes, that's great for the community, but when you think about what's best for you as an individual, it may not align to being equal, right? Like, you might not be helping out the community as much as you would be hurting yourself, right? But yeah.
All right, boss, let's test your mic again. Let's see what you got to say, baby. You there?
Yo, can you guys hear me all right?
Yeah, it's much better, much better.
Awesome.
Okay, so Manny is up next. Manny, what do you got to say?
Like that name.
Citadel was shorting my stream. They fucked up my audio.
First, I want to apologize for messing my voice. There's a ton of people on this call that's recording. I don't really want to, risk my position or my career. But I don't want myself to be doxxed. But Cat Striker, she knows me personally. She can vouch for me. But, I want to thank you guys and gals for bringing education and PD, to the populace, because, really the biggest advantage that we have from the inside, being from my career, is that, we have the availability to, information, and you guys are getting education and information out. I really appreciate that, because you're helping level out the playing field. So, just, giving words of encouragement, keep us safe up a bit, because I know you guys are getting a lot of flack and a lot of hate. But, keep providing everybody with, ammunition, to make very informed decisions. So, God bless you guys, and thank you for everything you do.
Appreciate you, bro. Enjoyed the voice.
Manny, did you know your voice was on crazy mode?
Yeah, I did it on purpose, because, I'm trying not to get doxxed.
Gotcha. Alright, buddy.
You know me, you know who I am, so.
I do, actually.
Thank you, brother. That means a lot to us. Thank you very much, Manny.
Yeah, and stay safe, you guys. There's a lot of people out there that want to hurt you guys, so just keep yourself safe. Make sure there's always somebody to be there, to answer a phone call if you guys need it. So just be very careful out there.
Thanks a lot.
I appreciate it very much.
Respect. If anybody wants to come find me at Randall's house. That's right.
Yeah, all four of us all fucking like a centipede when we go to bed tonight. Don't worry about it.
He didn't want to dox himself, so he
who do we got
hit his
next?
voice.
We got Liz again. That's what we got. I'm gonna pull him up or her up.
He was just giving props, and he was thanking us, and I thanked him as well.
Hi.
For those that couldn't understand it, because it was tough to understand.
Having some thoughts about what we were talking about earlier, with regard to a lot of these, also I'm concerned about commercial leases, because a lot of them have caps on their CPI raises, and it's not going to keep up with obviously what the CPI is actually doing, and that's also going to be something that's going to start, I think, with conditions that are placed on a lot of these big commercial loans that people have on these large properties, especially Class A and all that. I know that the CPI has not been keeping up with, the CPI on the leases has not been keeping up with the actual CPI, and a lot of these landlords are going to start having some issues with their commercial mortgages, because the lenders are going to say, hey, these leases are not, because they have conditions on those leases. When you write a lease to a tenant, it's got to be approved also when you go for a loan by the bank for those CPI increases to be sufficient to cover your debt service coverage ratio.
Very much. Like, I think that, I do believe that more, like, any sort of mortgage-backed security is affecting us right now. But I think where they've switched up, or where they're trying to adapt their game, is they've moved from, like, normal real estate that you and I would buy, right, to the commercial real estate, and that's kind of where they're offloading all the fucking bullshit.
Well, this is the thing, is if those lease rates, which are astronomical, especially look at, New York, LA, San Francisco, and, plus a lot of people are, working from home, and a lot of people are downsizing, and, because of the remote working, becoming more and more popular and actually more effective in some cases. I just see a big downturn coming in on commercial leases. People just walking away and saying, we can't support this, and it's gonna be a ripple effect also from that angle. I mean, we've got waves coming in from a lot of different angles.
Do you think that there's any market for, like, big companies like BlackRock and Vanguard to come buy up those properties and say, we don't give a fuck about the property that you have there, or any of your, like, leases or whatever, we just want the fucking land?
Well, I've been getting calls just recently from some of my big clients. I got a call 2 days ago from a big client who's been standing on the sideline just waiting for the crash. And he just called me and said, look, I'm ready to jump in, but, he had $50 million to spend. And I told him, I said, you're a bit early, but, we'll start looking at potential properties that'll be probably taking a big hit. So,
I was going to ask you about that. Sorry to cut you off there.
go ahead.
What's your timeline like for a potential recession or a time to buy? The way that I'm currently looking at the economy right now, I'm looking like the end of 2023, beginning of 2024. What do you see on your end?
Time to buy? Well,
yeah.
It's going to be
downturn in the economy.
I think from, going through this many times, people are going to be, right now, I know they're offloading. I know my biggest clients are offloading. They're quietly. Hello?
That was my bad. I fucked out.
Oh. No, I know they're quietly offloading. I know they are. And they see it coming, because they want to be out and have cash on hand, dry powder, to scoop up properties over the next couple of years. I remember in the 87 crisis, it took about 5 years for it to start to come back. 93, I think 94 is when it actually, and I remember negotiating with, Textron and all these big, they were also, big holders of commercial mortgages. And, we were negotiating sales for 30 cents on the dollar on those loans. And, then having to rewrite every single one of those leases and kick every tenant out and start all over again. And I just see it happening. I just see it coming.
I have a question. What are you doing as being the industry that you're in? How are you bracing yourself for that, like in your business?
My clients are keeping their powder dry right now, and they're going to be investing, looking for a lot. They're looking right now. They're calling me and saying, "Look, we are ready to start looking at any kind of, situations where they're either going to default or they're starting to default, because the defaults are happening. They're rising. I monitor all these markets literally every day, not just the stock market, but I monitor what's happening in healthcare real estate because I've been an expert in that for 25 years. I monitor, obviously, commercial real estate very heavily, and I'm just, from my clients that I meet with, that I talk to, and knowing what they're doing, I could just tell you that, these guys are no dummies. And when I see them start to quietly offload, and I see them also talking about,
what's up?
The fact that they're having trouble getting securing debt as easily as they used to be, and they're concerned.
Something's up.
Sorry, continue. My bad.
Yeah, so I think, as far as, what TMI was asking, I think that we're going to see, obviously, by the end of the year, the recession is going to hit hard. It's going to be very deep, and it's going to last.
Are you thinking this year?
Yeah.
Okay.
Yes.
I think I joined Twitter, actually. I think that the community that we've been, I want to say blessed with, but robbed. We've all been robbed together at the same time. I think we've been blessed with each other. It is a hive mind of great people that come from different walks of life. I think that the squeeze is one thing. Financial education is another one. Speaking to some of these guys, Randall, Boss, AMC Biggums, can sometimes be really mind-boggling, but figuring out what to do post-squeeze with that money is going to be the biggest speed bump, in my opinion. Like, squeeze is one thing. Figuring out how to actually handle your money, and Randall's question with what are you doing with your money now is great, because that's going to be what people are going to need to look forward to, how to kind of brace, how to kind of diversify, and how to kind of prepare and set themselves up for, like, the next, however long the recession lasts, and then also making sure that they also can see the upside of the recovery along the lines which their clients are currently setting up. So kind of, I guess, I'll send you a message to kind of break that down, because I think that's going to be some great valuable information for people over the next 6 to 12 months.
Yeah, I think probably the time to get in, I mean, if it were me, and I'm not going to give advice to people in different states that I'm not licensed in, but I wouldn't even start to invest in commercial real estate or even homes for probably the next year or two.
Okay, and that's what I was probably thinking about. Crazy.
Because you're going to want to see what falls first and what falls the hardest. It's going to be, Class A is really going to take a hit. Class C is the safest real estate you can be in.
Do you mind giving that? I mean, I have an understanding what it is, but do you mind giving a breakdown for everybody that's
okay, Class A, the high rises, the very sleek, properties. The desirable area, they're just kind of outside that sphere. And then you have the Class C, which are basically Class C building would be like a garden-style apartment building. Okay? Those going up or going down in either a recession or even in, inflation always catch people coming up or down. It's the safest bet. Class C, garden-style apartment units were the safest bet of any of my clients' portfolios.
My mom actually always owned one as well. Those exact style, like multi-unit. Multi-unit buildings like that, apartment style with a garden unit. You're absolutely right. They always retain their value very well.
Yeah, they will do well because people moving out of Class A that can't afford those rents anymore, they move down into a Class C, and when you're going up, then obviously people move into Class A, but a lot of people then come back into the Class C. So either way, it catches it going up or down. So that's been, in my experience, that's been the only investment that if you buy a Class C type of building, which is like I said, like a garden style apartment building, or maybe an office building or a retail property that's not in the best location, but yet it's, like kind of, they call them bread and butter units. Bread and butter. They will, you'll have your bread buttered one way or the other.
I love it. I love that. Great information. I know that a few years ago I went to get my first place, and my friends were all getting their first place, and they were buying, they're buying these places, apartment downtown, yada yada. I'm buying a place out in the city, renting out the basement apartment. I'm like, the world's coming to an end, guys. Prepare yourselves in a few years. They're like, nah, don't worry about it. I'm like, all right.
Well, the rents have gone up 30% in the last year, and that's not even counting the years before that. You can't maintain that. You cannot maintain that.
It's going to be interesting for a while.
Your business has not increased that much each year. There's no way. I don't know any business that increased 30% year over year.
Yeah, no, I rent out my basement, so I don't increase my rent for my tenants. They're good for as long as this thing lasts.
We've done well in logistics, thankfully, but that's not something that I'm very happy to say. But that's been good overall, because it's been a long time coming in the trucking industry. Truckers have been way underpaid for a long time, as have all other. The majority of other people, just underpaid workers in general. Can we get some more people up for questions, Liz? That's awesome points that you bring up, and thank you so much for sharing that info. I could listen to you all night.
That was amazing.
But I definitely want to get some more people up as well. Thank you. Thank you. You are awesome.
Hey, how you guys doing?
What's up, Jake?
Sorry, I brought Lucas up because he was waiting for a minute.
Yes, please, bring him up.
All right. During the Great Depression, everybody was in soup kitchen lines and worried about what was going to happen tomorrow, except for the people in the Appalachian Mountains, because they never needed anything from anybody in the first place. So, what I give to you, the greatest gift ever, is if you have dirt, plant something in it. If you have a fishing pole, please know how to use it. Because most of my grandparents came through the Depression in the Appalachian Mountains, and they didn't even talk about this. There was no suffering because they didn't have anything in the first place, and they learned how to live off the elements that were around them. So I know that living in urban areas are, because I lived in Buckhead in Atlanta, glitzy glam, Beverly Hills of the South, whatever you say. And I went back to the Appalachian Mountains because I had no need of all of that. So what I propose everyone on here do is learn how to live like a pauper and try to maintain that for a little while so your money doesn't leave you while this thing is going on. Because I know the first thing that a lot of people are going to want to do is go out and buy a crazy expensive car and do all this stuff to impress their friends. But you got to think about something, and I'm going to say this and leave. Louis Vuitton is the last name. Gucci is the last name. Versace is the last name. Ralph Lauren is the last name.
And everybody's buying products off of these people and spending all their money to impress the Joneses. They're keeping up with the Joneses, and everybody winds up broke. So I want people to think about those things when they do come into money, because I'm not spending shit. And as it stands right now with AMC, I'm not selling shit. So that's what I'm going to say.
Question, statement and then question. First of all, future for AMC is very bright. Question for you, Marcel. Do you see a possibility that Wanda Group may come in and purchase a sizable stake in AMC in the future? They had a very big impact on the company when they were majority owners.
Wanda does not own almost any AMC shares at all. They sold like 95 to 98% of the position. I think they've got maybe a few thousand shares at best, 5,000, 10,000 shares. Because of the issues between Chinese sanctions against America and American sanctions against China, when that happened, the same sanctions that we're talking about here in January of 2021 and May of 2021, May and June of 2021, those were the same things that caused these changes, you know? Does that make sense?
Yeah, I know they don't have much of a stake now, but you don't see that as a possibility in the future, given the dynamic?
I don't, because Wanda's situation, from what I understand, was one where they needed to divest of American assets as quickly as possible. So they had no choice but to get out, and they found it as a nice exit point, and they made a lot of money off of it. So more power to them there, you know? But no, I don't really think that Wanda's going to be picking up AMC. Chinese companies are not investing in America and vice versa. American companies are not taking out more investments in China because there's already massive investment on those emerging markets. But take a look at what's been happening on, I'm not sure, a lot of people are unaware, but what's been happening on China, they're in Asian markets in general, they're down halfway to the levels that they were in 2008 as far as the market crash goes. So they're 50% of the way to their lowest point in 2008 already in the Chinese market because of all these Chinese Asian developer situations and everything that's going on over there with their markets. Overvalued tech was down 7% yesterday, you know, so all sorts of companies are losing value, getting suspended, and being removed from American markets and being removed from Chinese markets at the same time. Like look at Didi, for example. They're no longer, you know, they're pretty much getting phased out of the American market, as well as like a lot of other companies. And the same thing's happening over there, like Lockheed Martin and a bunch of other companies that were sanctioned by China. So yeah, that's a great question. Did you have any other questions you want to ask about?
No, I mean, so they did cash out quite a bit of money, but they had a good impact on AMC theaters. My theory with Wanda Group is, you know, they're still looking to dominate, and AMC was a very good partner of theirs when they were invested. And with the changing dynamic of the global shareholder base with AMC, the positive sentiment, the capital inflow in AMC, I think, you know, it's definitely on their radar in terms of sanctions and all of that. What's interesting to bring up is, I think it was a few weeks ago when China signaled that they were going to be supporting foreign companies, those Chinese stocks rallied like crazy.
Yeah.
Didi, Baba, all of them shot up insane numbers. So it's kind of confusing. I don't get it, but yeah, any additional insight that you have on that would.
They keep putting their money. They keep putting as these things happen. Like these things keep flowing back and forth. They put money in and take money out of those markets. You know, so it's like, for example, last month BlackRock sold off $370 million worth of their emerging markets position with exposure to China, but at the same time, they still have, you know, hundreds of billions of dollars of exposure alone, just BlackRock, to those emerging markets in China. You know, it's an ever-changing situation in which they're putting money in and out of every market, pretty much every day. Every day, the Asian market, the European market, American, crypto, you name it, man. NFTs, if there's money out there being moved, it's being abused by these guys without question. Do you guys want to? I appreciate the question, man. That's fantastic.
That's pretty much all we got, baby.
Awesome. All right, well, let's wrap it up, man. It's been a couple of hours now, so I want to say thank you to everybody. Let me see. I had one comment here. Somebody mentioned something here in the YouTube. You know, Nightmare McCaw, thanks so much for your support. Mentioned, you know what they're going to do when it crashes? They'll blame us and say it's our fault, even though they knew what they were doing, and it pisses me off. What do you guys think about that? You think they're going to blame us?
I know they will. Easy peasy.
They're already blaming us.
Yeah.
That's true. Did you notice that with the articles that were coming out in January of 2021 called retail investors barbarians, and said that the retail investor barbarians weren't going to take down Wall Street? That was a Wall Street Journal article. And
they're looking to make us a scapegoat after all this, in the same way that I think they're trying to use other quote-unquote world events to blame us on as well.
I think you're absolutely right, dude. I think you're absolutely
Listen,
right.
the fact that they were questioning DFV, and there are so many different people that could have been pulled in for the same amount of questioning that worked on Wall Street over the last 100 years, is just an idea of what's to come.
I think you're right, bro. There's a lot of issues going on here that we've got to deal with. And as retail investors, and I think that people just need to stay strong in their current play and remember the due diligence that they've done. Remember what got them here and what they're looking forward to. Remember 2008. You know, remember these assholes that were standing over people laughing during, the riots and the protests after 2008 and the movement in 2011 and 13 as well, you know, during those stock market collapses that were also linked to basically the issues regarding the debt ceiling. So it's a nasty problem that we're going to continue to have until these changes are actually happen. This bubble has to burst, in my opinion, and I think that the sooner we get out of the way, the better for most people, to be honest with you. I hate to say it like that, but we're not even halfway there. The Chinese markets are halfway down to where they were in their lowest levels in 2008, and that should give people a clear indication of just how bad things are going to get. We are seeing mortgage rates go up now for the first time. Sorry if my mic's messed up. Mortgage rates are down for the first time, or up for the first time, over 5%. This is the first time this has happened since 2009. It should be an indication that real estate bubble is following right along the stock market. So I hope people take a serious look into what's happening around them economically and in their investments, and do the best they can to find the best hedge for their current position, you know, and diversify in whatever good way that is. I'm not a financial advisor, but I think that people need to do their own due diligence and really work hard to figure out what makes the most sense for them, whether it be meme stocks, tangibles, precious metals, real estate, land, you know, it could be food, whatever it is that you decide that you need, you should really consider taking this very seriously, because I'm not a fear monger. I don't think any of us are. And we're just trying to share information that we've learned that is quite scary and very disgusting, and we're not happy to talk about it. Let's put it that way. But it's something that we think needs to be shared with the community worldwide, as far as the investing community, because we're all just trying to get ahead. These financial institutions are getting bailouts by the trillions every single year, and we're lucky to get a $1,400 stimulus when we're getting locked down and unable to work. So there's a lot of issues that we've got to deal with as retail investors, and we've got to do everything we can to instill change in our banks, in our broker dealers, in our stock markets, in the market makers, and in our government. So I think people really need to stand up and open their fucking eyes.
And when it happens, just don't fucking dance.
It's an inevitability here. Be honest with yourselves, you know. And a lot of people keep wondering why, if AMC and GameStop are going to squeeze. And I think you've already seen just a little tiny baby taste of what's to come from what happened in January and in June. Because the issues that we have now in the stock market, there's absolutely no liquidity. The government is now doing the opposite. Yeah, they're not quantitative easing anymore. And tapering is not the opposite. You know, it's semantics, but it's true. The opposite of quantitative easing would be uneasing, quantitative uneasing. So on a technicality, that may be the case. But the Fed is now starting to actually taper as well. So it's even worse than if they were just doing the opposite of quantitative easing. Not only are they're beginning to unwind, and it's happening in a time where none of these banks can buy it. And if they do, at the end of the day, when this financial collapse occurs, the Fed's just going to end up bailing them out. So people that say that they think like $300 or $800 or $1,000 on AMC or GameStop is the ceiling because the SEC or the DTC is going to step in, or because of the market makers manipulation, whatever, that's absolute fucking utter nonsense. Because no matter what, at the end of the day, if a stock market crash were to unfortunately happen, which is seeming more and more like an inevitability every single moment, the shorts have to close out their positions in order to meet margin call requirements. Whether that be from Chinese developers, real estate companies, military companies, from sanctions, or from market crashes, or whatever the fuck it might be. It's coming in due time, it seems like. What was up, Randall?
I was going to say that I agree with you 100%. This is not just fucking AMC. It's not just fucking GameStop. It's not any of the stocks. I mean, this is it's a cancer across the whole fucking market. And that's kind of what we're expecting to see. Like, I'm all in. My family's all in on AMC. Like, I'm grinding this out until either I die by the sword or I get rich by the sword. Because I believe in this. But I also believe in the research that I've done, that you've done, that Biggums has done, like all of us. And I just know that this is much bigger than just fucking AMC and GameStop. I mean, this is it's across everything.
That being said, I want to thank Randall Cornett, Cat Striker, the Masked Investor, everybody else who came out, Jackson Hunter, Pam the Trader, everybody else who was here with us tonight to discuss this stuff. Thank you very much. Appreciate all of you guys. If you guys have any last things you'd like to say, I'd be more than happy to hear from you before we wrap up. Because I've got one more thing I want to say after you.
Well, there's 4 requests, so how do you want to let everybody talk, or like you want to cut it?
All right, 4 requests. Bring them up, all 4 of them.
All right, I'm bringing all of them up.
Thanks, brother.
Not everybody talk at once, but I connected them all.
Let's start with Mark of something. Mark of the Beast. Please go ahead, brother.
What up, BossBlunts, man? I remember being on this journey with you when you were at the warehouse fire, and I was like, man, this is getting crazy, and you had to go the back way. But,
that's cool, man.
Awesome, man. And then I got my boy Mass Investor, who's always calm, cool, and collected. My girl Cat Striker, who I got to meet in person, wonderful person who's always been about this movement, looking about different ways. But guys, it's been a journey to say the least. We've all been, here for well over a year. Nobody thought we were going to be, here this long. I mean, just look at what we're doing together. I mean, just be proud of ourselves, how we've been handling this last year and the last few months, the silent battles that we fought, the moments that we had to humble ourselves, the time we've even wiped our own tears. I mean, this is the time to celebrate our strength. I mean, and really see that tough people last longer than tough times. I mean, look at like this. It's not about anybody else's agenda. Like our goals don't have to be the biggest or the most notable. Whether you guys are CEOs, parents, coaches, the artists, as long as this commitment it's meaningful to you, then it's fucking valuable. And like my boy says, let's fucking go. I mean, it's all about, you know, our conviction. And our conviction is we're beyond convicted. We seen that this thing was a chess match. I mean, the ability to contemplate and act using the knowledge, the experience, understanding, common sense, insight, and unbiased judgment. You know, we've really got to see how we've grown over this last year, the knowledge we've gained, and you know, it's all key to this unique puzzle that we all play. You know, we all have our uniqueness, and we're all different, but we bring everything to this table. And can you imagine what we're doing now? And I'll be quick here, but look, can you imagine post MOASS? Like, I'm not emotionally attached to money. You know, I'm really not. You know, I always keep my heart in the right place, good intentions. I'm all about, you know, this fair and transparent market that we don't have right now. And I'll use every dollar post MOASS to continuously point out the corruption, the manipulation. Almost did my boy BossBlunts. I love watching the video. Like when you're out there, like, hey, I gotta find a back way to this warehouse fire. I'm gonna go this way because the cops are blocking it. But I'm always, you know, paying attention to what's happening around me. I surround myself with like-minded individuals who have their hearts in the right place, good intentions, and no hidden agendas. And there's so many amazing individuals in this community. And like I said from the very beginning when I got into this play, I said AMC is gonna slap harder than Dad's belt when you see my report card. That conviction is still there, and that's still gonna happen. Let's fucking go.
Hell yeah, man. I fucking love it. We're gonna be so fucking rich. It's fucking phenomenal. And I truly believe that. Anyways.
Hey, guys.
Go ahead.
Hey, I just wanted to say thanks, boss. Been watching you for a while. Randall, you too. Cap, thanks for all you do with the banners and shit. I just want to say one thing. Remember Keith Gill, the fucking value. Remember when he was called into Congress, and one of the Congress members said, I had asked him, they said, how many people are in the room with you? Remember that, guys? How many people are in the room with you?
He looked so scared when they asked that. He was like, what the fuck?
But remember, when the time comes, when we get this MOASS going, we'll be in the same position as him. No one's going to be with us, but eventually, in the end, we will all win as a community. And that's all I wanted to say. Thanks, guys.
Appreciate it, man, so much.
Thanks, brother. Hell yeah.
Yeah, I just got a quick question. What do you guys take on Russia? S&P in the last 24 hours notified everybody through news that Russia has defaulted on their debt. I've been trying to pay with those whack-a-mole tickets they call money over there. So what is your take on that?
I mean, they got a lot of fucking natural resources. I don't know.
What I'm saying is I think there's a lot of funds tied up in Russian debt. Am I not correct?
Oh, for sure. For sure there is. For me, I'm thinking about these guys, and like I said, I don't know. I think they have no fear from any other nation outside of us, and that's not even there for them right now. And I think they're playing with fucking monopoly money.
There is a lot of money.
The fuck out.
Yeah, there is a lot of money there. For example, Shell, BP Oil Company, left $5 billion, $6 billion on the table by pulling out of Russia. And it's going to be even more than that. That's going to be a huge loss for them, and all the losses down the line for them as well. So it's going to be massive loss of GDP and corporate profits and personal profits all around the world because of Russia, American sanctions against Russia, Russian sanctions against America, American sanctions against China, and Chinese sanctions against America, and everything else that's about to happen. So yeah, you're absolutely right, man. It's a hot mess, and it's not looking to get any better anytime soon. It's going to get a lot worse before it gets better.
Okay, well, how that affects the liquidity that the people were depending on over there to short stocks?
You can't even short stocks in Russia right now. It's illegal. They're not allowing it.
Well, what I'm saying is a lot of companies over here we're using the Russian market to as a debt system as collateral.
Sure, that's a lot of money that they're about to lose if they didn't divest in it. You know, a lot of money got left on the table over there, and you know, so yeah, there's going to be massive losses, man. I can't state how much because none of us really know. We won't know for a few years, but when it comes out, it's going to be ridiculous. It's going to be massive. I do know that. But yeah, I appreciate it, man. Thanks so much.
All right, thanks, guys. Thanks
of course,
for the space.
thank
I
you.
appreciate it.
Yeah, sorry to be so negative about it. That's not my intention. But
Well,
yeah,
I'm not necessarily looking for negative. I'm trying to see if there are factors mitigating factors that are going to affect their use of finding liquidity to stop the stock from going up, to keep shorting it down. That's what I'm looking for. I don't give a shit what happens in Russia.
yeah. This is bad news for all these banks and prime brokers and hedge funds, and the Fed. You know, and sadly the majority of Americans. But it's good news for most of us. I hate to say it like that, but it's gonna be a very bittersweet thing for me. Let's put it that way. I think for a lot of us. You know, but yeah, thanks so much, brother. What about Stacks? Go ahead, brother.
Hey, what's going on, boss?
What's up, brother?
Randall, TMI. Hey, I got a quick question, man. Forgive me if it sounds foolish or stupid, but I'm just trying to gain a few more wrinkles. With the liquidity crisis coming, and if margin calls do happen, every couple of months when we have a run up, we hear that, oh, such and such covered. They covered. Well, we know they didn't. But when it really does start to happen, and margin calls start to happen, order in which, does it go from like the oldest to the newest? Is a certain ticker first? How does that work? And the reason why I'm asking is because wouldn't there be some sort of indicator in those so-called zombie stocks? Way over leveraged, wouldn't they still move when we're about to jump? Wouldn't we see that happen?
Could you phrase that a little bit? Could you rephrase that a little bit? So I'm not sure I quite understand what you mean.
Your mic's fucked up again.
I think you told me to rephrase it.
Yeah, if you can, but Randall, you can answer it, or MOASS, TMI, or any of you guys, because my mic's kind of messed up right now.
I'm just asking that. Oh, go ahead.
Go ahead. No, go ahead. Go ahead and re-ask it, man.
You know how every time we have a little bit of a spike in our stocks, and they covered back then when it ran up to 30 or when it ran up to 35, whatnot, and we know they didn't. When this really does happen, and these Chinese bonds become worthless and that liquidity dries up, and these companies, these hedge funds start to get margin called, or they start to really close their positions, do they have to do it in a certain order from like oldest to newest, or a certain ticker or price of a ticker, or like that? And the reason why I ask is because in my thoughts, something just, we all know it's about to go out of business, but it still has a nominal amount of short positions against it. Wouldn't we see some kind of indication that the MOASS is about to happen with those zombie stocks?
So I think it's you're asking a great question. It's very complex, to be honest. There are certain aspects to it that I think we don't fully have the knowledge to, but in regards to somebody requesting for the shares that they had lent out to be returned back to them, that means that someone has to go out there and get those shares. They wouldn't necessarily be able to go out into people's accounts and buy back specific shares that they lent out. They would just have to replace the overall number of shares that were lent out back to whoever the lender was, right? So I don't think there would be an order of the shares recovered according to how long they've been out there. Because if you bought shares, and Pan's been buying shares since 2021, right? If you bought shares in 2021, they're just looking to get those shares back. So the buying starts. The buying has to start from somewhere. So I don't think there's a specific order. There may be a specific order with who's buying shares and which markets they're buying from, or which brokers kind of get the orders first, but I don't think that's going to come by request. It's going to come by order flow or, some sort of back order deal. So I don't think there's going to be a specific order according to how long these stocks have been out.
I agree with you, TMI, and I think I can even break this down even simpler. It's going to be whatever fucking tank is putting the most pressure on them. That we need these fucking shares back, or you guys need to fucking make good on this shit, right? Like, hey, let's say, for example, and I'm not saying it is both or fucking JP Morgan or whatever. Whatever you want to put it.
JP Morgan.
Yeah, whoever the fuck it is, it's gonna be, hey, we need our shit fucking back. Like right now, we're having a liquidity crunch, and that's gonna be so. Whatever stock is the most shorted, fucking, and they use the most derivatives to short the stock or to kind of kick the can down the road, those are the ones that they're going to get the most pressure from first. There won't be an order or a rhyme or reason. It's going to be the one that they feel the most fucking heat from, honestly, in my opinion anyways.
Yeah, and the thing too is like, this is why people have said this before. I'm not making this up. I'm not the first person to say this, right? But like, it could happen with several different small to mid cap stocks to kick it up, and then when this basically starts, and I'm not speaking specifically about MOASS, but let's just say a short squeeze, right? It can really be FOMO buying into several different small cap stocks running all at the same time. I keep an indication for KOSS on my broker. When KOSS runs up a certain amount of percentage, I get a notification because I want to know. No one is freaking. There's no community behind KOSS, and if there is, I apologize. I just don't see y'all. Okay, but when shit hits the fan, that shit always starts running. So it's good to see when things start moving. It can be a request to shares back from literally any other ticker that can kind of kick things off. So it'll be interesting to watch nonetheless, but I don't think there's a specific rhyme or reason. It's just a matter of who's putting the pressure on and how much pressure is being applied.
Well, that goes back to the point that I said that earlier. It was like, hey, this is, as much as people may agree or disagree with, this is not just an AMC and GameStop problem. This is a fucking market-wide problem.
Yeah,
so
exactly.
When they all run, they probably will all run because it's going to be what we all are expecting. See, this is the thing. We've been talking about this for months, and whether we're going back and forth on, a market crash or whatever people believe, but I think that most of us agree that, hey, look, there's some fucking bullshit going on, and I believe in my research. I've done the groundwork. Like, I believe in, like, if I'm wrong, I'll be fucking wrong. I'll eat that in the fucking chin all day. But what I believe is that, again, this is not just two stocks. Like, this is going to ripple across everything, like, really fast and quick. And it's going to be, like, one of those things where you're going to wake up and you're like, what the fuck is happening? And, again, it's like, like what they said in fucking The Big Short, just don't fucking dance. We all know, we've been talking about it for years, guys. We know what's happening. We know what's about to come. Like, all of us here. And we keep, like, we'll bounce back and forward, and we'll think about different scenarios and shit. But at the end of the day, at the core of this, we know that a bunch of fucking greedy banks got irresponsible. Bottom line, right? And we're going to get rich off them being, greedy.
Yeah, I agree. Also, wanted to add that what TMI was saying. Other stocks might run first. Even though AMC and GME is talked about the most, you have to understand if they're going to cover the smaller stocks, and that'll be the domino effect. AMC and GME will eventually run with those. So please keep in mind, AMC and GME might not run first, but
yeah, if you look back 2 weeks, I even tweeted out, look at all these small to mid-cap stocks running. I wonder what other small to mid-cap stocks are going to run next. And this was a week before we ran up 44%, right? Because you saw all these different small cap stocks day after day after day going up 50%, 60%, 70%, 100%. There was two small cap stocks went up back-to-back days over 100%, Verver and something else. Like, that was more pharmaceutical, right? But like, you'll start seeing the different stocks run. What AMC and GME add to the equation is not only the communities behind them, not only the amount of over leveraging to short positions or whatever else is happening behind the scenes that we probably can't even calculate at this point in time, but also the brand that now is, that has been GME, that AMC has created, because I would, probably pay respect to GME being the first meme stock, if you will. the brand that's there. When things start moving, people aren't going to turn on CNBC and look on the news. They're going to go to the broker and pull up AMC, type that in first, what's going on. They're going to pull up GME, type that in first, what's going on. You had, 25% of Americans trading GME and AMC in January 2021? They're just sitting down waiting for shit to pop off again. Like, the FOMO for me is, there's 4 million people holding AMC right now. There's 40 million people on the sidelines saying, when this shit pops up, I'm going to get back in, I'm just going to wait. That's why my mom was like, people were like, well, he's going to sell early. I'm like, for every one person looking to sell, there's going to be 10 people looking to get in. I couldn't care less. Like, when these things run, they're going to run, and nothing can stop them. That'll be fun.
I agree. And there's a lot of people that I know that don't go on these space calls. They're just ordinary people like us, and
oh yeah, all my friends stop talking about a long time ago. Every once in a while they check in with me. Hey, how's it going over there? Like, you guys doing all right?
I know people that are holding at 50 right now, and I told them where we're coming from. And I know people that are, still at $8 and they're still holding, so the community is big. You guys have done this. It's huge. It's not just, the U.S. and Canada. It's worldwide. So we've seen all the M3 stuff that they try to do with even the trading platforms and 212 in the Europe, the UK, where they're telling their the shareholders to you can't transfer your AMC shares or GME shares. If you do, then they're going to have to sell it. So I mean, come on, why is it only those two? Please give me a break.
I think it's all right.
And you know what? I think people.
I was asking because we all know this just isn't AMC and GME. This is a market-wide problem, right. And we know it's going to ripple out. And I think I got the answer I was looking for. That it's a great possibility it could start with small caps, but the part that I didn't think about was that it could happen so fast, like Randall was saying, that we could just wake up one day and everything's awry. So that's just something that I needed to think about, and I appreciate you guys' answer, and thank you for holding the space, boss.
Hey, brother, can you hear me right now?
Yeah, I can hear you now.
I would like to thank you for that question. And I want to tell you, you're absolutely right. You want to know why? You guys can't see this on the Twitter space call, but on my screen right now on my YouTube channel, I have a screenshot pulled up of somebody from January 28th, 9:34 in the morning, 4 minutes after the market opened. And they put up 0.54 shares of GameStop for sale at market price. Okay, and that thing filled in a split second. Does anybody know how much it filled for? 0.54 shares of GameStop? It filled for an average price of $5,124.50 per share. So that means he sold a little over half a share for right around $2,500 to $2,800. That's fucking awesome. And that's why, because of these executive orders that made that Chinese military collateral go worthless on January 28th, as of 8:30 a.m., that is why things got so out of control that they had to go position close only via these broker dealers. And so that's why most majority of people were unable to buy. And it caused a lot of people to get scared and sell. And then it caused the market makers and hedge funds to get their hands on shares to short even further, because nobody could buy. So that is the fuckery that we've come to know. And this is something that I think a lot of people are unaware of. That somebody, and a lot of people, this is just one. You can look around on Google and DuckDuckGo, and you can find a lot of people sold their fractional shares or a share for thousands of dollars a share on GameStop and hundreds of dollars a share on AMC. You just got to look around and you'll find them. They're out there. So I think it's definitely something that we're going to wake up in the morning and the price is just going to go absolutely fucking bonkers. Thanks so much for your question, brother.
You're welcome. Thanks for letting me express it. You guys have a good evening.
Thanks, man. Hey, Marcel, what date was that again?
January 28th, 2021, 4 minutes after the market opened, 9:34 a.m. Eastern Standard Time. Or Eastern Daylight Time, I believe.
All right, thanks a lot, man.
No problem. And for
Thanks
those
a
that
lot, guys. You guys can take me down. Thanks a lot for your time, dude.
appreciate it. And one thing I want to let you guys know is if you weren't watching along on the stream, I showed the executive order by Biden, okay? And that shit on January 28th was implemented and caused a lot of collateral to become worthless. A few days later, after the PCO, it was extended through May 27th. There's another executive order that I showed on May 27th that was in effect and caused the same collateral to become worthless again. And then on June 3rd of 2021, Biden filed an amendment, and on page 30,146 of that executive order, they extended it through June 3rd, 2022. So everybody who listened to the end, or everybody who's here right now, I want to tell you guys this. The same way that they started delta hedging a few days or a few weeks before May 27th, 2021, when that executive order happened, and the same way that they started delta hedging a few days before January 28th, 2021, when this executive order took effect, I believe they're going to start delta hedging prior to the June 3rd, 2022, 12:01 a.m. Eastern Daylight Time, when this order takes effect again. Because on February 15th, 2022, Janet Yellen, old fucking Yeller in the United States Treasury, filed an additional amendment to this that added in 35 more companies. So now there's over 65 companies just here alone, not counting real estate developers, just here that are being sanctioned, that are going to be completely worthless collateral. And BlackRock and Vanguard, via their FTSE emerging markets and other emerging market ETFs, hold billions and billions of dollars worth. And collectively, banks worldwide hold trillions of dollars worth of this shit. So this could essentially cause the beginning of the MOASS, if not at least another short squeeze, even if it does get extended after a certain period of time. And I will let everybody know if this thing is extended. I'll tell you that much. So if you want to know, you can go ahead and drop a subscribe on YouTube, drop a like if you want. Make sure you guys go check out Randall Cornett on YouTube and Twitter. Make sure you guys go check out Kat Stryker on Twitter. She is awesome. Amazing person in the community. There's all sorts of cool shit. Flies airplanes over the fucking Super Bowl. Amazing things that these people are doing. Randall Cornett's giving is the contract information all the time. I love it. TMI, Mass Investor, daily updates on AMC and GameStop and the markets. You guys got to follow him. And AMC Biggums, incredible due diligence on the Federal Reserve, the markets, the plunge protection team, everything, you name it. Everybody else in here listening, make sure you guys support the community. There's too much division. Make sure you guys go out there, follow, thanks so much to Pam the Trader and everybody else as well, all the mods. Follow the people in the community and take the information that you find valuable and discard the rest. Do your own due diligence, verify, don't just believe what they have to say. If someone's coming at you with some trust me bro bullshit, if someone's coming up with trust you bro bullshit and not showing you receipts, tell them to fuck off and show me the receipts. On that note, thank you everybody so much for coming. I love you. Peace and wealth to everybody. Thank you so much. We're going to be so fucking rich.
So fucking rich.
Be all long time, baby. Let's go.
Thanks, guys.
Fucking know it. I'm going to play my song just because I love it and it's obnoxious, and that's what makes me love it even more. You can stick around if you want, otherwise you can get out. Love you guys.
Gonna be so goddamn rich. I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't you?
Yellen, give me the fucking money.
if you guys are still here, go watch Pantheon AMC. That's where I'm going right now. Pantheon AMC is a great YouTuber.
Fantastic job, boss. Fantastic job.
Thanks, brother. I appreciate it. Thank you very much. I was just telling everyone to go see Pantheon AMC next because he's on, I think, right now on YouTube, and he's doing a lot of great coverage, like 5 days a week. The guy's got incredible due diligence. He's very respectful. He knows a lot about markets and about the finance in general, not just AMC and GameStop. So he was talking about citizenship by investment for post MOASS plans yesterday in his stream, and I'm sure he's got some good stuff going on. So, excuse me, go check out Pantheon AMC on YouTube. And AMC Biggums is on Pantheon. And if anyone wants to go drink to their chat, I'll be there as soon as I get home. Sweet. Let's go over there and check out AMC Biggums and Pantheon. Why the hell not? I'll see you guys there. We're going to be fucking rich, and I'm glad to fucking talk about it. I got no problem being here having fun with you guys and discussing it. I'll see you guys later. Pantheon AMC, let's go.